Imagine waking up to news that could fundamentally reshape how states approach their financial reserves. Well, that's exactly what's unfolded in Arizona. In a potentially historic move, Arizona lawmakers have passed legislation that establishes a dedicated Bitcoin and digital assets reserve fund, making it one of the first U.S. states to formally recognize and manage Bitcoin at the Treasury level, even if not through direct investment. This isn't just another cryptocurrency headline. This represents a fundamental shift in how governments are beginning to view digital assets, with implications that could ripple through the American economy for decades to come. While most people stay focused on daily price swings, the smartest entrepreneurs and investors are already positioning themselves ahead of what could be the next major phase in Bitcoin's institutional adoption. Today, I'm breaking down what Arizona's Bitcoin reserve legislation actually means, why it matters to you, and how the professional Bitcoin landscape is evolving as more government entities move into the space. Let's understand what's actually happening with this Arizona Bitcoin reserve. Arizona lawmakers passed House Bill 2749, which officially creates a Bitcoin and digital assets reserve fund, allowing the state to hold unclaimed digital assets such as Bitcoin in their original form. This new reserve fund does not authorize active investment of taxpayer funds or pension money into Bitcoin. That proposal, known as Senate Bill 1025, was vetoed by Governor Katie Hobbs due to concerns over risk and volatility, especially regarding public retirement assets. Instead, HB 2749 offers a more cautious yet innovative approach. It enables Arizona to retain and manage unclaimed crypto assets, including any Bitcoin acquired through airdrops, staking, or property abandonment, all while ensuring on-chain transparency and high-security custodianship. It's a major milestone nonetheless. By creating a legal and operational structure for holding crypto natively, Arizona sends a clear signal to other states that crypto adoption isn't hypothetical anymore. It's happening. To understand why this matters, we need to look at the bigger picture of Bitcoin adoption. While Arizona's direct investment bill was vetoed, the successful passage of HB 2749 is still a step forward in integrating Bitcoin into state-level finance. And Arizona isn't alone. States like New Hampshire have already moved ahead with laws allowing direct investment in digital assets. Meanwhile, others, including Texas and Florida, continue to explore reserve strategies tied to Bitcoin and blockchain infrastructure. Why is this happening now? Well, there's several key factors driving this trend. First, institutional recognition of Bitcoin has never been stronger. BlackRock, Fidelity, and other asset giants now offer regulated Bitcoin products, reducing the stigma and boosting legitimacy. Inflation and fiscal instability have led to increased demand for decentralized, non-debasable assets. With only 21 million Bitcoin ever to exist, states are starting to see it as a digital real estate, scarce, secure, and inflation-proof. Economic competition is heating up between states. By becoming crypto-friendly, Arizona is staking its claim as a forward-thinking innovation hub, attracting entrepreneurs, miners, and other blockchain companies. What's fascinating about HB 2749 is that it lays the groundwork for future moves. By establishing custodial infrastructure now, Arizona gives itself the option to scale further, potentially even returning to direct investment discussions later on, with a tested system already in place. The implications of Arizona's reserve fund are still profound, even without immediate investment. First, it legitimizes crypto custodianship at the state level. This isn't just theory anymore. Arizona is now legally able to store Bitcoin in its native form on behalf of the state, a capability very few public institutions currently possess. Second, it preserves the integrity of digital assets for Arizona residents. Instead of liquidating unclaimed Bitcoin into cash, which most governments still do, the state will now hold and manage those coins in their original state, helping residents retain value if they reclaim them later. Third, it signals preparation for future scarcity. As more entities, governments included, start to accumulate Bitcoin, demand will inevitably pressure the fixed supply. This could accelerate the great supply squeeze narrative, especially if other states follow Arizona's lead. And finally, it highlights the growing strategic value of Bitcoin mining. If states want Bitcoin exposure without buying it on the open market, mining partnerships or incentives for in-state mining could be next. Arizona already has the infrastructure to attract miners, and this reserve policy gives them one more reason to set up shop. With HB 2749 now signed into law, Arizona is entering a new chapter of crypto governance. The state will begin developing operational procedures for managing unclaimed digital assets, including security protocols, storage mechanisms, and risk management policies. Importantly, no taxpayer money will be used. The fund is powered entirely by unclaimed property and blockchain native events like staking or airdrops. While this isn't as aggressive as directly allocating treasury reserves into Bitcoin, the precedent is critical. It positions Arizona ahead of the curve in terms of digital asset infrastructure, legal readiness, and public sector transparency. It also leaves the door open for more assertive policies in the future. State Representative Jeff Winninger, who helped introduce prior Bitcoin legislation, has hinted that digital asset integration is a long-term play, and this reserve fund is just step one. Other states will be watching. If Arizona demonstrates stability, compliance, and economic upside from holding digital assets natively, similar bills could spread across the US in a matter of months. For investors and entrepreneurs, this development should be seen as yet another signal that institutional adoption is accelerating. Between the federal approval of spot Bitcoin ETFs, Arizona's reserve fund, and continued mining expansions nationwide, the writing is on the wall. Bitcoin is here to stay. As of May of 2025, MicroStrategy remains the largest corporate Bitcoin holder with over 568,000 Bitcoin. Arizona's reserve fund doesn't directly challenge those numbers, but it does something equally important. It changes the narrative. Now governments aren't just regulating Bitcoin, they're holding it. And that has knock-on effects. Bitcoin miners stand to benefit from increased government engagement, especially in states that recognize the value of domestic production. Investors, meanwhile, may find renewed confidence in Bitcoin's long-term value as demand from public institutions continues to rise. This also reinforces the idea that crypto infrastructure businesses, custody, compliance, and security are becoming indispensable. The public sector will need help managing and safeguarding these assets, creating a whole new market for Web3 native service providers. Arizona's move to establish a Bitcoin and digital assets reserve fund represents a pivotal moment in the evolution of cryptocurrency, not as speculation, but as sovereign-grade infrastructure. This isn't just about a single state holding a few coins. It's about the growing realization that Bitcoin is a financial primitive with real strategic value. And even without direct investment, Arizona has now built the framework to securely manage and store digital assets as part of its treasury process. Whether or not other states follow suit immediately, the message is clear. Governments are no longer ignoring crypto, they're integrating it. The question is no longer whether digital assets belong in the public sector. It's how quickly and confidently states will embrace that reality, and who will lead. The race for Bitcoin legitimacy has officially entered the government level, and like any seismic financial shift, those who understand the playbook early will have the upper hand. Thanks for watching. If you found this valuable, hit like and subscribe for more insights on Bitcoin, mining, and our ever-evolving digital economy. Things are moving fast, and staying informed is the only edge that matters.